time frame, we'll get started. My name's Ed Stone. I'm the person you see there scaring the children that might be watching behind you. Very happy to have all of you join us today for the second in our four-part series during Long-Term Care Awareness Month. In my world, long-term care is aware every month, but we're especially doing it here in the month of November. We're going to talk today about underwriting, the do's and don'ts, and I'm very happy to have joining us David Gorman, who is one of the underwriters that we work with very closely at One America Care Solutions. One America is based in Indianapolis, Indiana, my hometown. So I'm always happy to have somebody from One America representing my birthplace. I'm not there now. I'm up north in Vermont where it's already snowing. So those of you that don't have snow, come on up and spend some money and do some skiing in our wonderful ski resorts up here. David, I want to welcome you. Thank you for joining us this morning. I wanted to start off by telling everyone that David's with One America. One America is one of many carriers that we work with in the long-term care space. There's not a zillion of them left like there were 20 years ago, but One America has got a lot of staying power in terms of their financials, et cetera, years in the business, experience in the linked benefit space. So that's one of the reasons I chose, of all my carriers, to have One America join us today. We're going to talk about field underwriting. We're going to talk about the challenges in underwriting for those of you that don't specialize in long-term care, those of you that do, to hear some of the latest things that we're seeing from the underwriting and claim standpoint. So with that, I just kind of want to start off and give David an opportunity to do a little commercial for One America and talk about your overall underwriting philosophy and how you guys approach this particular market. So David, have at it.
Sure. Thanks, Ed. Just by way of background, I probably worked with some of those other companies 20 years ago that you're right. There were quite a few of them. I worked at Hancock and Transamerica and GE and Genworth. Anyway, in my current role, I'm the director of underwriting at One America. I think our overall philosophy, I think it can be summed up by saying that, we provide our customers with an asset-based solution to long-term care needs. It's not a standalone policy, which tends to be use it or lose it. If you never use your benefits, you're not going to get anything back. Whereas this hybrid product, if you don't use all your LTC benefits, the rest of the face amount on the whole life policy part of it does get paid out. So it's not a use it or lose it, and you're getting it's a better value for your money, and it's superior to a standalone long-term care, in my opinion. So that's what we specialize in. This product has been in the market for coming up to 30 years. It's very stable. It's a great product.
You've been in the market almost 30 years. You and that other folks named after that president, you were the first two folks to come up with this concept of linking life insurance and long-term care.
Right.
And since then, you've done the evolution like a lot of the carriers in terms of the the options that are on the product and the way you can pay for it, et cetera. Are there some unique features in the Care Solutions product that you'd like to highlight here? Some of the things that are a little unusual about your product.
Well, one of the best features of the product, it's called a COB rider, which is the continuation of benefits. So if you have a $200,000 face amount policy, you end up using that money for long-term care needs and you've exhausted that money. If you have a COB rider, we will continue to pay for as long as you're receiving care.
So the old lifetime unlimited benefits in effect, correct?
Correct. And the other nice feature is an acceleration of benefits. An EOB, there's a limit to how many of the benefits you can use each month to pay LTC costs, but you can accelerate that. So that's another nice rider as well.
Okay. So while not necessarily everyone needs or would want unlimited benefits, we have an outlet here with One America for those situations where they're concerned about running out of benefits before they run out of breath, right?
Right.
Okay, super. A lot of folks out there, much to my dismay, since I've been in the long-term care space over 30 years, don't specialize in this marketplace. They might be excellent field underwriters for life insurance, income protection, that sort of thing. from your standpoint, what kind of challenges do you run into? I know what I run into from the wholesaling standpoint. What kind of challenges do you and the underwriting teams run into when you're working with folks who, let's just say, aren't specialists in long-term care?
Yeah, the primary difference between a standalone long-term care or a standalone life policy, because we are a whole life policy with LTC benefits, we have to underwrite it for both mortality, which is the risk of dying, and then for morbidity, which is the risk of becoming sick, primarily ADL dependent. You know, the 5 ADLs, bathing, dressing, etc. That would trigger a claim. So we have to evaluate it for life insurance, traditionally, mortality, and then once they pass that, we then look at the morbidity concerns. So
Which,
someone,
I was gonna say, chicken and egg, which kind of comes first? Which directs you more than the other, or are they equal? How do you balance it?
well, they're equal in the sense that you have to pass both of them. I usually start with the life. You know, that's a little more easy to understand, I think. Evaluating people for their potential to become sick and ADL dependent is a little trickier. So I usually just do the life part first. They pass that, I'll move on to the LTC.
Now, you guys will go all the way up to table 8 though in your underwriting. So how
Correct.
much does a table, if you went to table 6 or something, how much is that going to affect what they would be offered in say the COB rider or something like that?
There are some restrictions based on age. I don't have them in front of me, but for example, if you're under age 50, we're not going to give you a lifetime COB if it's rated.
Okay.
Which just kind of makes sense. You know, why would we do that? Yeah, but we can rate up to table 8. So you can get a lot of clients covered, even though they're going to be paying table 6 or 8 rates or 5 that are shut out of traditional long-term care. For example, diabetics who smoke, diabetics with heart disease. You know, they're not going to get our preferred rates, but we can often make an offer where in standalone long-term care, you're not going to get anything from anybody.
So not to say that the linked benefits or One American in particular is looking for the junk. There is flexibility that perhaps when the agent has been doing his or her pre-screening, which we'll talk about in a minute, and they find that, you know, a traditional policy is not going to work, we still have some outlets. And at some point, you know, the client, I hate to say it this way, the client should be happy that they got something if they have these kind of significant issues.
You know, especially if you have like one healthy spouse and one not healthy spouse. That's you know, that they can share the policy.
Your product is built on a last to die whole life chassis, right?
Correct.
So if I remember my life insurance underwriting days a little bit, isn't it a lot better in that situation where he doesn't have quite the greatest health in the world, couldn't get it standing on his own, she's in good shape, that we're kind of blending because you're more concerned about the last one dying than you are the first one dying, right?
Yeah, I mean, they both have to qualify for the product, but yes.
So those of you listening, you know, if you have those situations where inevitably one of them isn't, you know, the triathlete, usually him, let's make sure that you ask when you talk to myself here at the agency, let us know that, which kind of brings me to the whole pre-screening issue. As I always tell advisors, all the money, desire, motivation in the world for your clients to get coverage doesn't mean anything if we can't get through underwriting, because there's no guarantee issue anymore. That's what almost killed us in our industry, was guarantee issue and modified guarantee issue.
I remember doing those.
Yeah, especially at our old pyramid company we both worked at. Exactly.
Oh yeah.
The question then becomes, what tips can you give field underwriters, our advisors, about how to do a thorough field underwriting so that when they come to us at First American, we've got a pretty good idea. Nah, this company doesn't like that kind of person. This company is more, willing to take a risk. How would you address that if you were talking to an agent that doesn't specialize in this stuff?
I would make use of our field guide. That breaks down most of the common conditions and it will tell you if it's available for expedited underwriting or traditional underwriting, or if it's not eligible at all, if it's an automatic decline. Most of the automatic declines are pretty familiar: Parkinson's, Alzheimer's. It's just nobody's going to take them.
Right.
Those are fairly common. But make use of that guide. There's the build chart is in there too, which is pretty liberal. And as you touched on, we do have a PUI process. You can send an email. We have a PUI inbox in Outlook. The underwriters staff that 10 hours a day. If you have any question about a pre-qual or conditions someone might have that you're going to be interviewing, send it to PUI. You'll get a response probably within an hour, and it will guide you in the right direction.
Yeah, those of you listening, send those things over to me, and I'll get them in there. And I will tell you, David is not exaggerating when he says within an hour. I've sent stuff in, and as I turned away to look at something else, I looked back, I've gotten answers literally that quickly. So, it's a very responsive, and the team there at One America is very thorough. If I don't give them enough information, your team's going to come back and say, hey, we really need to know this, this, and this, because, we want to give you a fair shake in terms of what we project. Now, I think the operative word is project when we do these pre-screens, correct?
Yeah,
correct. You're not saying this is an offer, but if nothing else sneaky comes up, like that heart transplant they forgot to mention, we think we can do this, this, or this. Is that a fair statement?
It is. We get a lot of them where I saw one the other day. My client is a 58-year-old woman. She had breast cancer 3 years ago. Well, I need a lot more information.
Yeah. Okay.
What was the stage? What was the type? What was the cell type? How was she treated? Cancers are tricky. So, the more information you can provide, the better answer you're going to get. If it's vague, we can't always even give you an answer.
Right.
We just need more information. That's especially true with the cancers, which are complicated, and they're staged, and their cell types. Diabetes is also, and heart disease. Those are like the three big areas where the most information you could give us is helpful.
Okay. Of those three, you've done traditional underwriting in your career. Of those three, I found, maybe I'm just wishful thinking, I found that the traditional policies sometimes will look at something totally differently than the linked benefit, the asset-based products will, because I had a heart problem, which might concern from the life insurance standpoint, but doesn't concern as much from the traditional standpoint. Is that right? Am I still fair in saying that to advisors?
Yes. Yeah. There's a difference between, again, it's the morbidity or mortality. For example, a standalone life insurance policy, they would not be concerned particularly with like sleep apnea, osteoporosis, fibromyalgia, current physical therapy. Rheumatoid arthritis is a good one. It's not, for life insurance, it's not a mortality concern, but rheumatoid arthritis for morbidity for LTC is a huge concern because that goes directly to their ability to button a blouse, to dress themselves, bathe themselves, transfer, getting in and out of a chair. So yeah, there are some differences where life insurance might be more concerned than standalone would, or because we're a combined product, we're interested in both sides. So it does get a little tricky.
So when we say don't assume anything, what I try and tell advisors, I think you'd agree with this, is just because Bob or Mary got life insurance standard 3 years ago doesn't mean that they're going to get long-term care today, because as the life insurance, the rheumatoid arthritis in the knees from playing football, generally speaking, ain't going to kill you, but it could disable you and be ADL impaired. So the message, the reason I wanted to do an underwriting section is looking at all the stuff that comes in. I get cases where, why would you think that that could get through underwriting for long-term care when it clearly wouldn't? Do you get cases like that where you just kind of shake your head and say, what were they not thinking?
Why did you submit this?
Yeah, exactly.
We do.
Okay. I'm reading more and more in the trades and from hearing from your fellow underwriters and claims folks out there that it's becoming more of a concern about Betty's broken brain than Betty's broken hip in terms of the cognitive issues in the underwriting. Are you seeing more and more, in-depth looks at cognitive versus physical?
Cognitive is our number one concern because cognitive is our number one claim.
There you
As
go.
these baby boomers are entering their late 60s and early 70s, there's a pandemic of cognitive concerns in these
Yep.
populations, which is, of course, is why we screen them. There's this whole baby boomers that are moving along are
We're
concerning.
all cognitively impaired. Trust me. I'm right in that group of people where, according to our children, we've been cognitively impaired ever since they were teenagers, but that's a whole nother story entirely.
A senior moment.
Yeah, I've been using that one lately. When you're doing the cognitive screening, the telephone interviews and all, what sort of things are the clients, what should our advisors tell their clients to be, quote unquote, prepared for? Not cheating, but at least know that these kind of questions are going to come up.
In terms of the cognitive, to take
Mhm.
it seriously, we have a lot of people who fail it and then they come back and say, I wasn't really paying attention. I didn't know I had to do a cognitive. I was distracted. My kids were running around in the background, or my grandkids. You need to take it seriously because we don't repeat it. It's not the best 2 out of 3. You got one shot at it. So take it seriously. Don't be insulted. We've had some people who were insulted,
Mhm.
by taking a cognitive screen. Everybody over the age 60 does it. We treat everybody the same. Take it seriously, and that's my best advice.
Are they still asking who was the last 2 presidents of the United States, those sort of things, or have they gotten past that?
They haven't used that one in a few years, right?
Okay. Add 1 + 1 = 3 and you pass, that type of thing. Okay.
No, they don't
So
use that. It's more word recall driven.
word recall. Okay. How long do those calls usually last?
Just the cognitive alone?
The overall personal history interviews.
It depends on how complicated their history is, because
Okay.
they'll want details to medical history, medications, treatments. So if someone has 3 or 4 or 5 pretty significant medical histories, they can go over an hour or
Okay.
an hour, 20 minutes. If it's just the LTC cognitive piece, that's maybe 15 minutes, 18
Okay.
minutes,
Okay.
pretty quick.
So the advice to the folks on the call, our advisors on the call, is prepare your clients for this call.
Yes. Take it
Make sure,
seriously.
take it seriously. The only time I've ever had something done was at our former company. They failed it, and the chief underwriter listened to it and said, the only thing we'll do is if they'll go get a full neurological workup on their dime, get us the information, we might reconsider.
Yes, we'll do that as well.
And so you're asking them to spend a ton of money because they weren't paying attention. So
It's
guys,
$4,000 or $5,000.
yeah,
It's you don't
yeah.
want to do that if you don't have to.
So bottom line is, make sure your clients understand that this is coming. And if it's not a good time when your guys call, more than happy to reschedule, right? That doesn't have to be done right then.
I'd never understand it. Well, I was having a crisis when they called. The kitchen was on fire. Well, why didn't you just reschedule it? You can do that. You're the client.
Excuse me, my house is burning down. Can we speed this call up a little bit? At least you knew that they were cognitively aware of their surroundings. Okay.
That's right.
Very good. Very good. Length of service. I know, just like all the industry, we got slammed by the crazy Washington CARES program. We won't get into that conversation. That affected you guys as well. I know. Where are you kind of coming out of that at this point?
Well, we still have 1,000 Washington cases in the queue. They're just taking a long time to get through. One of the things about the Washington business, it's not the best business.
Mm-hmm.
They tended to throw in a lot of crappy business.
Tiny little policies.
Right. And, lots of young people with drug problems and alcohol problems. So it's not very good business, we've found,
Okay.
but we're still working through it. We're kind of focusing it. For example, doing the emphasizing the Washington cases that have cash with app, or something like a single premium payment. So we're trying to highlight and get those underwritten more quickly.
Okay.
But this is just not One America. This affects all of our vendors.
Exactly.
Exam One, getting those exam requirements done, LTC Group, getting the phone interviews done. That Washington law just backed the whole industry up. It's not just us. It's been a challenge for going on, what, 4 months?
Yeah, it was announced over a year ago and nobody took it seriously. And then, of course,
Right.
procrastination is our worst enemy. We do know, just so those of you that are listening, if you're not following much about that, the state of Washington put a program in place requiring everybody to pay a tax. Well, unless you're self-employed, pay a tax on your income starting January 1 to go into a state fund to create a $36,000 life, total benefit plan. The only way you could get out of that tax was to have a long-term care plan in place by 16 days ago.
November 1st.
November 1st. So clearly the last number I heard, David, was over 60,000 policies were submitted, from the state of Washington alone in a short period of time, and no carrier is prepared for that. So I don't think anybody blames the carriers about, the delays, but that's where that delay was coming from. And it affected every company that had linked benefit plans. It affected the regular life insurance stuff too. So
it's almost a good selling point, because if California does the same thing, which the rumors have it, and some of the more progressive states, Oregon, Colorado, don't wait till they do it. Get your policy now.
Yeah, I mean, it's, from the good side of it was it brought the awareness of long-term care, as an important subject. The bad part is what they did and how they rolled it out. And hopefully this will be looked at by the 17 other states that are actively pursuing this idea. So we won't get into that long-winded political discussion here today as to good or bad or ugly, but it is something, folks, that you need to talk with your clients about. Still has to go through underwriting. Just because it's a state program, being, state mandated program, doesn't mean One America or anybody's giving it away for free in terms of the underwriting. So be prepared for that sort of a situation. Where do you see the innovations in underwriting coming from? What types of things are you guys seeing to give you more underwriting information? Are you going the big data route like a lot of the life companies are doing, data-based underwriting? Where do you see it going in long-term care in the near future?
Database underwriting, certainly. Of more concern right now, or the biggest opportunity that I see, is electronic health records. And we're actually doing a pilot right now on electronic health records. There's a vendor that provides the service for us. If we can get electronic health records, if they're available, we can get them in 24 hours, sometimes even faster than that. The biggest lag time in underwriting is waiting for the medical records to come in.
Okay.
We can wait 3 weeks or a month or more. So if we can get them in 24 hours, that would be phenomenal. So we're actually doing a test pilot right now.
Okay.
We have a vendor called Clarito. And what we're doing is a small group of policies. We took 100 sample size, and we're ordering electronic health records on them, but we're also ordering it the traditional way. Then we're going to compare and see, did we get everything we needed from the electronic health records? So that to me, that is the biggest innovation. And
until we get to that, that could be absolutely game changer, because flip of a button, you have the information you need, and hopefully it's all there, et cetera.
Right.
In the meantime, here in the push card era, do clients have the ability to help move that along when they see do you suggest that it's been sitting there in your office for 3 weeks, doctor, could you please get this done? How have you coached people to get records faster if that's the biggest stumbling block?
To call their doctor and ask them to expedite the request. Unfortunately, they can't just go get them for us and send them in.
Mhm.
But if they work with their doctor, this is important to me. I have a deadline. Can you please escalate this request for the APSs?
Mhm.
And I used to listen to Denise Westbrook, who I worked with years ago, who would follow up on APSs. She would always say, well, you cash the check.
Yeah, they did. They cash. It helps pay for their condominiums, right? I
We've
understand.
already paid for it. So, what's,
Okay.
it's really the most help.
Well, I have found working with advisors and their clients that if that client makes the call to Dr. Jones and says, I've even had cases where they've said to the doctor, if these medical records don't get in there and I don't get issued this policy and something happens to me, I hope you got a spare bedroom because that's where I'm going to be. Jokingly, but still very subtly saying to the doctor, there is a liability there of you not responding quickly. So
Yeah.
we don't like to get to that point, but sometimes we, got to take a 2x4 sometimes to get these offices. Now, granted, COVID has had an impact on the whole industry in terms of access to that type of stuff. Are you seeing this loosening up from your standpoint in terms of COVID and what it's done to the underwriting? I know you got rid of the restrictions a while back, but where are you seeing that going? That'll be kind of one of our last things to talk about here.
The COVID restrictions in terms of underwriting?
Yeah, and what do you think, what you're seeing, the impact of COVID, somebody having had COVID, how you think that might be affecting going forward on underwriting?
That's a great question. I wish I knew. All these variants keep popping up and these resurgences. It's almost like a to be determined world. When I first heard COVID, I thought it would be here and gone in 12 months. And
Yeah.
it's dragging on. So, there's a whole group of people, I think it's 18% who develop long haulers syndrome, who the symptoms just keep on for years and years. We just don't know a lot at this point about either long haulers or how any prior exposure, current exposure, future exposure, changes in variants. So we're just, it's a to be determined world.
So would it be fair for an advisor to say to clients, hey, you got through COVID, maybe you tested positive, you went through it, you're healthy again. We don't know if there's going to be any contraction on when literature comes out or testing comes out that somebody that went through it is not as good a risk as somebody who didn't go through it. Maybe you ought to, get some coverage now before things change, because obviously it can't be canceled as long as you pay your premium. I'm not talking about adverse selection, just, go now before things change.
Yeah, if you're fully vaccinated and you don't have symptoms, you're